Welcome back. You're still with us here on Editors Roundtable. Well, we're in conversation with Amish Shah. Amish, what do you make of, the entire market setup as of now? We've run up a goodish bit. We could be in for a couple of hurdles from the global aspect. But would you adopt the buy on dips strategy if in case we do pull back a little bit? And what's your target on the Nifty itself?
I would go with the buy on dips. I agree that in the short term there are a few concerns that markets needs to absorb. But look, if you work with the scenario that US is not heading into a recession, historically we have seen markets do trade for a longer period of time at higher than long-term averages. I would argue that markets are still at long-term averages on a weighted average basis. And in fact, there is 1/3 of the market cap of even Nifty, which is still trading below long-term averages. Right. So there are still pockets of opportunities on a bottom-up basis. And in a no recession scenario within the US, I do think that valuations can expand. And in which case you could be probably, our target for Nifty for the year end is at 20,500.
Okay, and what kind of EPS growth are you factoring in on the Nifty? Is there a downside risk out there?
We are conservative, Nigel. We think that FY24 is going to be like 13% for Nifty. Consensus is at 17. For FY25, we are actually at 11%. Oh. Consensus is still at 17.
Yeah.
But even working with 13 and 11% respectively, I would argue that, and even if you don't stretch it much beyond the long-term average valuation multiple, markets could be higher than 20,000.
I just have one question because Ekta made this point earlier about how luxury sales are doing very well, right?
Yeah.
So whether it's real estate prices, whether it is autos, whether it is EVs, within the auto space, everything's doing well. In that entire gamut, is there something that you still like?
So again, we've become very bottom-up in our approach right now. We are constantly looking at stocks where valuations are not completely off the roof. Number one. Number two, where earnings visibility is quite high. And the third factor I would probably say is the positioning, given that it's a flows-driven market. So within discretionary, I would argue that, let's say, something within the jewelry space looks good, but within QSR, paints, consumer durables, that is a pocket that we are concerned at this point.
Okay, Amish, just on that point, when you said bottom up, the street was quite negative about the Infosys guidance cut that came through. But we've seen two large deals, which Infosys is one and HCL Tech is one as well. Do you think that there are green shoots? Would you be a buyer of IT?
Not really. IT is still our largest underweight sector. And I think that, look, even when we are talking about no recession in US, please remember that the growth rate or the economic growth rate in US is only going to decelerate, right? Recession just means that it is not going to be a negative growth. But this year, for instance, we are projecting 2.1% GDP growth for US. Next year, we are projecting only 1.1. And even in 2025, we are talking about only 1.3. So as the growth rates come off, we don't think that the companies will be in a hurry to bring back the discretionary IT spends just yet. And the valuations for the sector is also not really comforting. It still is our largest underweight at this time.
Talking about luxury, right? By the way, did you guys see that graph? Rolex sales are down sharply. I don't know if you guys saw it. They're down worldwide. Oh. And apparently that's because
I thought there was a waiting for Rolex.
The real big money was made by private equity chaps. They've stopped buying over the last 6 months. That's what I was told. So, but, other kinds of luxury still doing well.
I attended the Audi launch, right? The Q8 e-tron. And the starting price is 1.1 crores.
Oh my
and there's a
God.
booking, wait.
If you pay 5 lakhs, you'll get, that's the booking amount. So in that you can get a whole car actually, a small car if you buy.
All right, I don't...
Let's move on to the BRICS section. We're getting that left out feeling. Tell us, Prashant.
This is going to be interesting. Next week, the BRICS, the famous BRICS bloc that they're going to meet in South Africa. So I'm going to actually go across to the big wall and just tell you guys all about it. And it's going to be interesting for a bunch of reasons, but this is what I'm calling it, right? More bricks in the wall. Of course, you don't... it's from a song, obviously. But this is the summit which is taking place from the 22nd. That is Tuesday. It'll run till the 24th. And the meeting is happening in Johannesburg. It's a mouthful, but this is the agenda of the meeting. BRICS in Africa, Partnership for Mutually Accelerated Growth, Sustainable Development, etc., etc. Who's attending the summit? It's being attended by the leaders of the 5 countries. Well, you got all of them except Putin. The Russian president is not attending. The foreign minister is attending. Mr. Putin, of course, is going to make a video address to the summit. So it's going to be pretty big. Now we talk about regional blocks, right? We're talking about a multipolar kind of world. We're talking about, power centers shifting, etc., etc. So where does BRICS stand in all of that? Combined, the 5 countries now are about 31.5% of global GDP. The BRICS GDP actually is greater than the cumulative strength of G7 countries. I mean, that is quite interesting to note. BRICS countries are expected, and this is, by the way, the first report when Rupa Purushottam and others, when they put out, Goldman Sachs came out with that terminology, BRICS, they said, well, BRICS countries are going to contribute over 50% of global GDP by 2030. Well, there are indications that the bloc may be expanded. If it is expanded, you may actually get to 50% earlier. You're already at about 31.5% as things stand right now. Let's get to the expansion bit. According to Reuters, 23 countries have formally applied to become new members of BRICS. Russia, China, and South Africa seem to be more keen on expansion. India and Brazil apparently are on the fence. And, there are these statements from each of these countries which will come up all via Reuters, the news service. So this is what each of them have said. China is supportive. South Africa invited African countries. Russia will thinks that expansion will contribute to further development. India, interestingly, there was a comment made by the foreign minister who said that, we've got reservations about the expansion, but if it has to happen, then it should be via consensus. And this is, of course, the Brazilian position. They're saying that they're concerned with the cohesion of the group and their place in the bloc. Of course, this is going to be a crucial thing, expansion, and whether it happens or not when the summit starts. But there is another thing, right? We talk about common currencies. People paying in not the USD, but moving away from US dollars to other things. Now, a common BRICS currency seems to be extremely unlikely. It's very hard to implement. So that's not the thing. But could there be some sort of a common payment network which perhaps emerges? There is something called BRICS Pay, which was set up some while back, but it's been languishing. Could that be given a bit of a boost? Remember, just recently, you had Indian refiners which started paying oil imports from Russia in yuan, in Chinese yuan. So there is this push to move and kind of move to non-dollar currencies, local currencies basically. So that is something which perhaps could be developed on a priority as we look ahead. So this is going to be an interesting one. They say normally, and India is referred to as the last man standing in the BRICS bloc, but you've got others like China, Russia, etc., which are perhaps going through their own troubles, and it'll be interesting to see the interplay. There will be perhaps other headlines, etc., which are watched from the sidelines in the summit. India and China are not on the best of terms. So those things apart, I think it's going to be an interesting one. So just wanted to highlight some of the stuff to you guys. Sonia.
Okay, Prashant, thanks a lot for that. And we've completely run out of time on this edition of Editors Roundtable. So Amish, thanks a lot for being with us here in the studio. And you folks, thanks for watching. Keep it with CNBC TV 18. See you bright and early on Monday.